What is a line of credit and how does it work? A line of credit is a flexible loan from a financial institution that consists of a defined amount of money that you can access as needed and repay either immediately or over time. Interest is charged on a line of credit as soon as money is borrowed. But before starting the video, be sure to smash the like button, subscribe to never miss out on any of our videos. Without further delay, let's start the video. What is a line of credit? A line of credit is a preset amount of money that you can borrow from as needed. The lender sets the credit limit, and you only pay interest on the amount that you borrow. And the difference between a loan and a line of credit is the greater flexibility a line of credit offers. When you get a loan, you'll receive the entire loan amount up front. The lender will start charging you interest on that amount right away, and you'll need to make fixed payments. With a line of credit, you can borrow up to the credit limit at any time. As you pay down your balance on a line of credit, you'll also open up more available credit, and you can borrow from it again if you want. There are two types of lines of credit: secured line of credit, a line of credit where the borrower puts up assets as collateral. One of the most common examples is a home equity line of credit, HELOC, where the collateral is the borrower's home. If the borrower fails to repay a secured line of credit, then the lender can repossess the collateral. Unsecured line of credit, a line of credit without any collateral attached. Since the lender is taking a greater risk, unsecured lines of credit often have lower credit limits and higher interest rates. As you may have noticed, a line of credit works in a very similar way to a credit card. A line of credit has three advantages. Interest rates tend to be much lower on lines of credit than on credit cards. Lines of credit generally offer higher credit limits than credit cards. You can get cash from a line of credit. Although many credit cards offer cash advances, these usually have even higher interest rates, so it's smarter to only use a credit card for purchases. If you only need a secure payment method that can help you build credit, then opening a credit card is the way to go. But if you need to borrow money, you're better off with a line of credit. How to get a line of credit? Here are the steps you can follow to get a line of credit. Work on your credit score. Your credit score is a key factor when you apply for a line of credit. It affects whether the lender approves your application and what interest rate and credit limit you will get. You should check your credit score before applying and see if there are steps you can take to raise it, such as paying down any credit card balances you have. Decide if you want a secured or unsecured line of credit. You could get a much lower interest rate with a secured line of credit. To do this, you use your assets, such as your home, car, or even a savings account, as collateral. Offering collateral will also improve your chances of being approved, especially if you don't have a good credit score. Just remember that the lender can repossess your collateral if you default on your line of credit. Find a lender that offers lines of credit. A good place to start is your current bank or credit union, since you already have a financial relationship there. You should also shop around with other banks and financial institutions to compare your options. Choose an amount. During the application process, you'll need to request an amount. Think about how large a line of credit you want. Look at the minimum and maximum amounts that different lenders offer to help you decide. Fill out an application. The application process can vary by lender, but most will let you apply online. Expect to provide information on your income and assets. How to use a line of credit. Once you've been approved for a line of credit, you can make withdrawals. The way you do this depends on the lender. Many lenders transfer withdrawals directly to your bank account. There are also lenders that offer debit cards or checks you can use. You'll receive your minimum payment amount and due date from the lender after you make a withdrawal. As you borrow more or repay your balance, your minimum payment amount will change. Be careful about how much you withdraw from your line of credit. You'll be paying interest on each withdrawal, so it's not a good financial decision to use a line of credit or any form of credit for frivolous purchases. Whenever possible, you should also pay more than the minimum amount. You'll get your balance paid off more quickly and with less interest this way. That's all for this video. Hope you will enjoy the video, and more importantly, don't forget to subscribe to our channel and hit bell icon to notify about our new video. So bye for now, see you in the next video.